Hello, my friends. Ready to dive back into the basics of accounting? Today we'll tackle GAAP, what it actually is, why it matters for you as accountants, and why you can't just ignore it. GAAP stands for Generally Accepted Accounting Practice here in the United Kingdom. It's been around since the 1970s, which makes it older than most of the laptops we're using today. Now, in Britain, two things rule the accounting world: UK GAAP and the Companies Act. Think of them as partners, a bit like tea and biscuits. They're different, but they work best together. The Companies Act tells you when to file your accounts, what has to go in them, and which companies need which reports. GAAP, on the other hand, tells you how to actually do the accounting, how to record those transactions so the numbers in your reports make sense. And just so you know, UK GAAP is not the same as international standards. Don't mix them up. We'll look at the main differences together. Here's the big idea behind GAAP. You record a transaction when it happens, not when the money hits the bank. That's called the accrual method. Forget waiting for cash. If the deal's done, it goes in the books. In the UK, every set of accounts must follow this principle. We'll dig into the details in later lessons. GAAP is built from a few parts. First, there's something called SORP, the Statement of Recommended Practice. Sounds fancy, but really it just means extra guidance for certain industries. For example, charities, construction, housing, places that need more specific rules. Then we've got the Financial Reporting Standards, the FRS. These are the real backbone, covering your day-to-day accounting. For very small or micro businesses, you use Financial Reporting Standard 105. For medium and large companies, it's 102. Don't worry, I'll show you how to tell them apart in another session. And finally, there are other pieces of guidance, usually from the Financial Reporting Council. These are extra notes and explanations that help you apply GAAP in practice. The best bit? You can find all of this on gov.uk. Links are in your lesson, and the site even translates nicely into other languages. Handy if you ever need it. When you open up a standard, you'll see everything laid out. How to set accounting policies, how to handle estimates and errors, how to treat financial instruments, stocks, investment property, fixed assets, leases, you name it. My advice? Before we move on, just skim through the contents. You don't have to memorize the whole thing. I'll explain the important bits with examples as we go along. But it's good to get a feel for it, because GAAP underpins your two main financial statements, the balance sheet and the profit and loss account. Both of them are built on GAAP principles, which, remember, differ slightly from IFRS. Here's one key difference. UK GAAP sticks to the accrual method with historical cost. IFRS, on the other hand, mixes historical cost with fair value. Let me give you an example. Say you bought a computer 2 years ago for £1,000. You decided its useful life was 2 years. So by now it's fully written down and worth zero in your books. But under IFRS, you'd have to check its fair value. If that old computer is still worth £200 on the market, you'd record it at that value. If it's worth less than the book value, you'd reduce it. UK GAAP keeps it simpler. You stick with what you paid and how it depreciates over time. Now let's talk about intangible assets, things like software, goodwill, copyrights, patents. Under UK GAAP, you simply amortize them over their useful life. Straightforward. IFRS takes a different approach. Instead of amortizing, you often have to test for impairment. So here's another big difference. In the UK, you amortize. Under IFRS, you test. And finally, presentation. Financial statements in the UK look quite different in layout compared to IFRS reports. So it's important to get used to the UK format. Again, gov.uk is your go-to resource. And yes, at least once in your career, you should read through the standards themselves. Not all in one night with a pot of coffee, but bit by bit. It makes you a stronger accountant. So here's your homework. Take a look at the standards we mentioned today, especially the parts on differences. See how they're written and get familiar with the requirements. Next time, we'll roll up our sleeves and actually start preparing financial statements. See you then.